Hi, and welcome to a deep dive into income statement analysis. If you are preparing for ICANN or any other case study professional exams, or tackling financial challenges in the workplace, this video is your ultimate guide to mastering income statement analysis, including the statement of changes in equity. Why is this important? This isn't just about number crunching. It's about uncovering the story behind revenue trends, profitability, cost structures, and the financial bridges connecting the income statement with the statement of financial position. We also highlight how to interpret tax charges, dividend policies, and anomalies in key cost elements to provide meaningful insights in exams and real-world scenarios. Stay tuned as we transform complex concepts into practical insights you can apply confidently in exams and beyond. Let's take a deep dive, shall we? All right, I've got me now. I believe you can see me and the document in or on the screen. Income statement analysis, including the statement of changes in equity. So in developing your detailed analysis of financial statements, the key issues in income statement analysis concern financial results and financial performance. The main questions to be considered and answered are: what is the trend in revenue? So you're provided with maybe a 3-year financial statement or a 5-year financial statement. So what is the trend from year 1 on those information to year 3 or year 5? Is it up or down? Is there a dip or a nosedive or a plateau? In the revenue component, is revenue rising? What have they achieved? If they are failing, what are the causes? What is the rate of increase or decrease in revenue? So these are pertinent questions you must ask on looking at the income statement, especially the revenue area. What is the significant changes in sales mix for the revenue streams? What is the effect of changes in the sales mix for overall profitability? These are key questions you should ask as you're looking at the revenue area of the financials. What is the overall trend in gross profit? Is it rising or falling? In absolute or gross profit percentage terms. So looking at the impact of cost of sales or cost of goods sold, you should be able to decide or make a comprehensive overview initially on gross profit performance. Are the margins the same for different products or different revenue lines or centers? What is the pattern of costs against revenue streams? Are they rising or falling? What are the cost components? Which areas of the cost of sales is impacting the revenue or the gross profit? What is causing any inconsistency or changes in the revenue mix or revenue centers and the cost of sales structure? So these are very, very critical questions every finance professional or aspiring chartered accountant must ask. Which costs appear to be fixed in nature? So from the cost of sales, there are some that are fixed in nature, they cannot be changed or temporarily, and which are variable, which can be changed, which can be negotiated, which can be brought down. What is the operational gearing for the business? What is the mix gearing in terms of external debt and the internally generated capital of the business? So what are the operational gearing? Is the company highly geared, debt driven, or lowly geared, equity driven? Very important questions. Are there any material anomalies in any single key cost figure? So are there any materiality issues with any key cost figure, from the cost of sales, operational expenses, other internal and external expenses like depreciation, finance costs, amortization, expenses attributable to the government, taxes. Very important questions you should ask from the cost structure in the income statement. Is the level of operating profit and profit before tax being achieved satisfactory and stable? So it's the substantial profit being made after deduction of these pertinent important expenses. Are the profits increasing? Looking at the trend in those years. And at what rate? What percentage? Very important questions. Are there any material anomalies in any key cost figure? Is there consistency between one year and another year of the bridging items between income statement and financial position? How material are these following items? Closing inventory. How material are they? So when you look at the current asset on the income or the SFP, the current asset, the inventory figure, how much is it? Looking at your cost of sales or cost of goods sold. The depreciation and profits or losses on disposal. How material are these amounts? These are critical questions you must ask in your income statement analysis. And you should be able to answer them positively or negatively. Deferred income. Have the revenue been earned? How material are deferred income? Also, for the revenue that have been recognized based on IFRS 15, you have to test to ensure that those revenue have been earned so that this recognition criteria is met. Also have to look at impairment of accounts receivable, like I spoke to in the previous video on the IFRS 9's provision on expected credit loss, which are traditional provision for bad debts. Accruals on prepayments, you have to ask on these components in the current assets and current liability area. Is the tax charge reasonable? Very important question. Does the dividend policy make sense? Is it consistent? Are dividend declared above the earnings made in the company and eroding maybe the retained earnings? So these are pertinent and very important questions you should ask, you should look out for. The above list will enable a structured analysis of the components in the income statement in any case study exam, especially the ICANN case study exam. However, the most important aspect of this and all financial statement analysis is that, as well as providing information about the numerical changes, both in absolute and in percentage terms, it is the level of skillful commentary, your comments, and how you skillfully pen it down demonstrates appropriate professional expertise. This is very important. So your level of skillful comments, your comments based on these components, these questions, these reviews of the income statement analysis, linking the bridges to the SFP and the statement of changes in equity, looking at the changes in equity for those review periods, how the movement from equity and debt, how the company is leveraging debt and equity, and how you're able to comment and tell the financial story is a key professional expertise you must develop. And that is developed by practice, practice, and practice. This is very, very important. Bravo! You just unlocked the secrets of income statement analysis. From identifying revenue trends to decoding cost patterns and evaluating key bridging items. You are now equipped with the skills to interpret and articulate financial results and confidence. Financial results, I beg your pardon, with confidence. Thank you very much for watching and engaging. If you found this video helpful, remember to like and share with friends and colleagues to empower them with these insights. Together, let's raise the bar for professional excellence. Until next time, stay analytical, stay curious, and keep excelling. Your success starts here. See you in the next video. And until then, bye for now.